Today we are looking at an international monetary update that may appear unrelated to Iraq at first glance, but it offers valuable insight into how central banks around the world manage exchange rates, currency stability, and financial policy. Understanding these developments helps Iraqi Dinar followers place Iraq's own monetary strategy into a broader global context and better understand how central banks operate during changing economic conditions. The latest announcement comes from the Central Bank of the Russian Federation, which stated that beginning on the 6th of August, 2026, it has established official exchange rates for foreign currencies against the Russian ruble. Importantly, the statement also includes a standard disclaimer that the central bank does not assume any obligation to buy or sell foreign currency at the published exchange rates. While this may seem like a routine administrative update, it reflects an important principle of central banking that applies not only in Russia but in many countries across the world. Official exchange rates published by central banks are often reference rates, rather than direct trading offers. These rates are used for accounting purposes, taxation, customs calculations, financial reporting, and various government transactions. They provide a benchmark for the domestic financial system, but they do not necessarily represent the exact rate at which commercial banks or financial institutions will exchange currencies with customers. This distinction is essential because many people mistakenly believe that an official exchange rate is a guaranteed transaction price. In reality, market conditions, liquidity, banking costs, and regulatory requirements can all influence the actual exchange rate available to businesses and individuals. For Iraqi Dinar followers, this serves as a useful reminder that official exchange rates should always be interpreted carefully. Iraq itself operates under a managed exchange rate framework, in which the Central Bank of Iraq establishes official policy, while licensed financial institutions conduct currency transactions within the applicable regulatory environment. The relationship between an official rate and real-world market activity is an important part of understanding how modern monetary systems function. The Russian Central Bank's statement also highlights another important concept. Central banks frequently publish official exchange rates without committing themselves to unlimited intervention in the foreign exchange market. Instead, these published values serve as reference points that support financial reporting and monetary administration. The disclaimer simply clarifies that publishing an official rate does not mean the central bank stands ready to exchange unlimited quantities of foreign currency at that exact value. This approach is not unique to Russia. Around the world, central banks use different exchange rate systems, depending on their economic objectives. Some countries allow their currencies to float freely according to market supply and demand. Others maintain fixed exchange rates that are closely linked to another major currency. Many economies, including Iraq, operate somewhere between these two approaches through managed exchange rate systems that seek to balance stability with economic flexibility. For Iraqi Dinar observers, these international examples provide valuable perspective. Exchange rate management is rarely about a single announcement or isolated policy decision. Instead, it involves a continuous process of monitoring inflation, foreign exchange reserves, banking sector stability, international trade, capital flows, and overall economic confidence. Every central bank must evaluate these factors before making adjustments to monetary policy or exchange rate frameworks. One reason this Russian announcement deserves attention is because it reinforces the importance of transparency in central banking. Publishing official exchange rates on a regular schedule allows businesses, investors, financial institutions, government agencies, and international organizations to work from consistent reference values. Predictability is a valuable asset in financial markets because it reduces uncertainty and helps participants make informed decisions based on established benchmarks. Transparency has become increasingly important for central banks worldwide. Whether discussing inflation targets, interest rates, reserve management, or exchange rate policies, monetary authorities generally aim to communicate clearly with financial markets. Stable communication helps reduce unnecessary volatility and strengthens confidence in the financial system. For Iraq, communication from the central bank has also become an increasingly important component of monetary policy. Over recent years, Iraqi authorities have continued efforts to strengthen banking reforms, modernize payment systems, improve financial transparency, and enhance compliance with international banking standards. These reforms are designed to improve confidence, both domestically and internationally, supporting long-term economic development. Looking beyond Russia itself, official exchange rate announcements also remind investors and market participants that currency values are influenced by many interconnected factors. Interest rate policies, inflation trends, commodity prices, trade balances, geopolitical developments, and global financial conditions all play important roles in determining currency performance over time. No single published exchange rate can fully capture the complexity of international currency markets. For Iraqi Dinar followers, this broader understanding is particularly useful because discussions surrounding the IQD often generate speculation online. Responsible financial analysis requires separating routine administrative updates from genuine policy changes. A central bank publishing official reference rates should not automatically be interpreted as evidence of an imminent shift in monetary policy. Instead, such announcements are often part of the normal daily operations of a central banking institution. Another important takeaway is the role of institutional credibility. Financial markets place significant value on consistent policy implementation. When central banks regularly publish exchange rates, communicate clearly, and maintain stable monetary frameworks, they contribute to greater confidence among businesses and financial institutions. Stability often encourages investment, facilitates trade, and supports economic planning over longer time horizons. In Iraq's case, institutional development remains one of the most closely watched aspects of the country's financial future. Continued modernization of the banking sector, stronger financial regulation, expanded digital payment infrastructure, and improved international financial cooperation all contribute to creating a more resilient economic environment. These structural improvements often have greater long-term significance than short-term fluctuations in exchange rates. It is also worth emphasizing that exchange rates alone do not determine the overall strength of an economy. Productive investment, employment growth, infrastructure development, energy production, fiscal discipline, private sector expansion, and financial sector efficiency all contribute to sustainable economic performance. A currency reflects many underlying economic fundamentals, rather than existing independently from them. This is particularly relevant for Iraqi Dinar followers, who monitor international monetary developments. While official exchange rates provide useful information, they represent only one piece of a much larger economic picture. Responsible analysis requires examining central bank policies alongside broader indicators such as inflation, foreign reserves, government finances, banking sector health, and economic diversification initiatives. From a short-term perspective, the Russian central bank's announcement is primarily an operational update, rather than a signal of major monetary policy change. Financial institutions, businesses, and government agencies will use the published reference rates for official purposes, beginning on the specified effective date. Markets will continue responding to broader economic developments, rather than relying solely on these reference values.